Well, there are plenty of fundamentals that we are looking at. One, it was an OPEC monthly report that came in yesterday in sense of global demand and supply. It also had to do with the U.S. weekly inventories, and the U.S. and China trade talks is something that the crude prices and all other asset classes also are watching out for. Joining us to talk further about that is Peter McGuire. He joins us on a phone line from Australia. Peter, hi, good to have you. First of all, on the OPEC report itself, they have forecasted 2020 oil demand to an average 29.58 million barrels per day, which is less than what we are seeing right now, or the OPEC production also for that matter. How have you gone through the report, and what sense does it make for you when it comes to projections of demand for overall 2020?
Well, good morning or good afternoon, Manisha. Yes, exactly. I mean, look, when you take on board those numbers, and I reflect on them, but I also reflect on growing as far as demographics, and you've also got population base. I'm not sure whether you're going to actually be as tight as what they're saying. I feel as though that you've got so much demand coming from emerging markets, may even make it not really the true number. I feel that there's upside there as far as potential in the short run, and I feel as though that those numbers may stretch above 30 million barrels a day, quite simply because of growing demand from so many emerging markets.
Peter, also, what's your sense when it comes to prices for 2020? You spoke about the demand, but when it comes to prices, the street really seems to be quite divided. People are talking about 58 on the lower side and then 68 on the higher side as well. What is your sense?
Well, I feel as though in some ways it's going to be relatively range-bound. I think you've got so many moving parts now with the shale side in the States. You've got the IPO actually gone to market as far as Saudi Aramco. If you see no future, and which is a wild card to say that, no future supply issues as far as geopolitical shocks, those can't be ruled out, because we've only got to put our mind back to what we experienced mid-year with missiles coming over to hit Saudi refineries and so on. So how do we know that that won't present itself again in 2020? The realisation also is that the value of those refineries are far more than what possibly the Iranians were thinking. So there's that side of it. You've got also the uncertainty as far as some of those producers, the Iraqs, Irans and Libya. So I think that there's, again, going to be the potential to possibly have some form of disruption. So in turn that will create volatility to the market. And it's going to be hard to speculate where we see value, Manisha. I think it's going to be more or less, something there from that mid-50s to, say, the early 70s.
Okay. Also, how would you look at the metal prices, Peter? I know you watch that as well, and today seems to be a better day. We saw New York session see some gains in metal prices. Asia has seen some follow-through buying come in as well. 2018 was written off because we saw a decline across metals. The LME metal index was a very sharp decline. But this year, there are some pockets of gains here. Copper, for example, is up 3%. It was down 14.5% last year. Going forward, What is your sense for this sector? Will much depend on US and China, or do you think the buying is coming back?
Well, again, also, Manisha, just add into that, iron ore's at 92. So that's had a nice little bit of a recovery in the sense of what we've experienced over the last couple of months. So the rising tide has lifted all boats. I think there's so much conjecture out there. It's going to be a massive week. We've got what's happening in Brexit today, well, in the sense of the UK election, where we're supposedly going to see some sort of deal fleshed out. It's living that minute by minute in the sense of what for this Sunday, we've got the introduction of those tariffs on $156 billion of goods, on Chinese goods, and what retaliatory action China is going to have in case there isn't a deal struck. So they're the wild cards, and that's where many traders are either going to see, I think, large price whipsaws if there isn't a deal put to bed. And if that deal isn't put to bed, then really it's going to create a great degree of uncertainty leading us into 2020. I would have expected this time last year that you would have had a deal in the first quarter of 19. Here we are in the last quarter, in the really only days away till the end of the year. I think it's a wait-and-see approach, Manisha.